Yesterday, the Fed decided to turn hawkish. Even if we had the interest rate coming out at 4.5 as expected, it was a hold because last month we had a 4.5, this month we have a 4.5. But overall, from the FOMC meeting, we saw the Fed turn hawkish. And that's why, even if we had a hold, we saw gold moving down, the dollar moving up, and any dollar-based pair moving up, and any dollar quote pair moving down. My name is Shane Mungangi, the best market analyst here at HFM, and HFM is a multi-winning awarded broker that aims to provide for you as a trader the best trading environment, the best trading platform. So to begin with, yes, the Fed turned hawkish even after a decision to hold interest rates. Jerome Powell had decided not to concede to the pressure that Donald Trump is giving him. And also he had decided not to concede to the cooling inflation. Why is this so? The reason why Jerome Powell is doing this is because he said that there is some effects that came in with the tariffs, and we are still waiting to see what will these tariffs do. And there's a decision till there's an expectation of rate cuts on September. But according to how they were speaking yesterday, the overall tone was hawkish. Hawkish means there's a stance of a rate hike, which should not be the possibility in the US economy because you have seen the rise in debt. And if they decide to hike rates, it means that the US debt that they have, it means they will likely be paying it at a higher cost. Also, this is affecting US stocks short term, because if the stance is hawkish, short term, it means also US stocks will be affected, and a slight down reaction that will show us that these stocks, there's a likelihood of them when they want to borrow money to better their company, they'll have to borrow it with higher interest, but that is short term. So coming on to the charts, you can see, starting on from the US index, you can see our charts from the previous day, that is on a Tuesday. We saw a sharp bullish reaction to our 98.07 level, and yesterday we came and retested it, then got that bullish reaction on top after the Fed interest rate decision to hold, but a hawkish stand. So today we can still see we are above this support zone, and we are targeting the 98.79 level. Moving on to gold. Gold, you can see right now it's below our 3384.25 level, and we are aiming to target the 33.820 level. Gold seems pretty bearish today with two bearish candles, with also one indecision candle at our previous support zone, and now we are below it. Came to retested it today during the open, and now we are moving pretty bearish. Also remember, one thing that can change our stance on the bearish movement on gold is the US and the Israel and Iran conflict. And it came in today. Iran just bombed Israel, and that is a geopolitical factor, and you all know geopolitical factors tend to affect gold. And if you are a trader, you have to be keen to understand what is happening around the world and how will that affect the asset that I'm trading. So as we still stand in a hawkish position, still remember that there are still geopolitical factors trying to affect how we are trading. On the US 500, you can see that sharp reaction. We were in a bullish form, then that when the hawkish stand came in, we saw that sellers came in strongly, and it retested our 59.79.04 level. But remember, it was only a short-term reaction. Overall tone of the stocks is an upward movement. So still, our 60.36.00 level is still our target, But remember, you are also in this consolidation range that we have been ranging for more than 5 days. So if I want to see a breakout from this consolidation, remember, I have to see, I always speak about this every single day, and I hope it sticks to you. I have to see volume confirming the breakout, and I have to see a momentum candle. So after I see that confirming that buyers are stepping in, now I will wait for a retest and enter at my zone that I marked. Same with the US 100. The stocks will most of the time will move the same way. And you can see the US 100 yesterday we came, we are almost retesting our 2156 7.32 level, and right now yesterday we had an indecision candle on the stocks. Why is the US 100 different from the US 500 printing yesterday's printing? Even if you had a hawkish stand on the interest rate decision, just only on the US 100, we understand that US 100 consists of 100 tech companies, and right now there's a pretty large momentum on the tech companies because of the rising AI that is influencing tech companies to be on demand. AI has been the major hit, the major talk, and if everyone is talking about AI, there's an increase of demand, and it's influencing the US 100 stocks. So yesterday we had that indecision signaling that even if we had some bit of pressure, the US 100 will still stand on its toes and remain bullish. On the Euro USD, you can see yesterday we were pretty affected by that hold decision and hawkish stand, and we are currently below the 1.14886 level. We came below it, and now we are retesting that level. Where will I be targeting? I'll be looking at the 1.14247 level as my target as we continue this bearish movement. And the JPY USD, the same thing. We had that massive candle printing downwards on Tuesday. Then yesterday, Wednesday, we had that form of retesting the level, and right now we are below our support zone. And where will I be targeting? I'll be targeting pretty much the 1.32649 level. If anything else changes, because today we have the interest rate decision for the JPP. So if the JPP interest rate decision they decide to cut, that will be a fuel to the JPP, and it will influence the JPP to move pretty down. But if they decide to hike, again, that's a different stance. We'll be moving upwards on the JPP. Now I want us to look at the Audi USD. I've been talking pretty much about this for the past 1 week, even 1 month. Sorry about that. For the past 1 month, and I've been saying that since we broke out from this level, considering we have been consolidating that much, this breakout was not a good breakout. And I said I'm not looking to take this form of breakout because we don't have volume confirming it down here that it's a valid breakout, and we do not have momentum candles showing that buyers are stepping in. And right now you can see truly it is not a valid breakout, and we are moving quite bearish down. Even today, opening slightly above our level and now moving pretty down the 0.64917. So my stance on Audi USD will still remain bearish, else anything changes on the Audi USD. On the USD JPY, moving the same as the dollar, because right now we know that the USD is the best currency in this pair, and we are retesting the 145.215 level. There's something interesting about this USD JPY. The USD, yesterday we saw in the US economy, they decided to hold interest rates. Then on Monday we also saw on the JPY economy, they decided to hold interest rates. So on a scale of interest rates, it is balanced, because hold. For the JPY was 0.5, for the USD was 4.5. So the stance was a balanced stance. But remember, after the FOMC meeting, it signaled that the Fed are likely to be more hawkish. Hawkish means a stance of a likelihood of a hike. So because of that, the scale has been slightly tipped upwards on the side of the USD, signaling that on the USD, the USD might be strong and it may affect the USD JPY. Therefore, on the USD JPY, what's my outlook? Slightly bullish because of that hawkish stand. On the US oil, the oil is pretty much affected by geopolitical factors, and we talked about it. Iran, being one of the top 5 oil producers in the world, is involved in a war between Iran. It's involved in a war with Israel, and because of that, the distribution chain has been affected, and the demand will increase because supply is being affected. So we saw that sharp spike on oil, and a retest to 71.33 level will be a good move to take to continue that bounce up all the way to 80.42, even if that's a pretty big gap to be targeting. Yes. So with that said, my name is Shen Mwangangi, again, the best market analyst here at HFM, and we aim to give you the best feedback on what is happening in the markets. We also advise you as a trader or investor that give us the comments on the comment section, give us the comments in the chats on how we can improve on our daily morning market call. And this daily morning market call is for you and to help you better your trading and better how you see the markets on a fundamental stand. So with that said, goodbye and see you tomorrow, same time, same place. And for those joining us for our physical classes, today we get to discuss about fundamentals. So see you today on our classes from 11 a.m. all the way to 12:30. Goodbye and have a lovely trading day.